Here's the 3 ways how you can make money with open interest. First, it is stop loss hunt, breakout, and my favorite one, absorption. Those patterns help me to make such profits. Watch closely to also make such good trades. Let's dive into each of them. First, of course, it would be stop loss hunt. I use it in a range or as a trend continuation. You can see here's my execution, and here we have a double situation which I allow. You can see that Solana was in this beautiful uptrend and price created a range. And of course, at range low, what we had, you can see exactly here, quite significant drop in open interest and quite significant negative delta, more than 100 mil. What this stuff means that with bigger chance, quite a lot of people that built long positions, their stop losses were taken here. And that's exactly a moment when it's wise to take a trade. Let's open it, reply exactly that situation, how you would trade it in the future. You must have a clear range or a clear trend. Like here, it was obvious that trend was up. Price took that range low with significant drop on open interest. Honestly, here on TradingView, you can see that there is no significant drop. I advise you to use open interest on value data because, as you can see, data from top futures exchanges, and it's way more accurate. As you can see, it was exactly this moment when price took range low. We have quite significant drop in delta, and we have quite significant drop in open interest. Beautiful stuff. And after that, you can see how Solana did significant more. Let's cover view some other examples. One of my favorite example, it was on BTC, because as I showed to you, you can use it in a range or into trend direction. And maybe one of the greatest example of beautiful stop loss hunt was on BTC when price was in this powerful uptrend. And you can see what Bitcoin did. Bitcoin drop took range low, and here was significant drop in open interest. Honestly, on value it was even better because once more on value you have aggregated data from aggregated exchanges. And that was exactly this situation. Pay attention. What happened here? Price took range low. Open interest at some moment was at 260 contracts. After that, it dropped during this candle by minus 20,000 contracts. You just simply calculate how much money is that. Like if you would calculate 20,000 contracts by average price of BTC, like at that moment, let's assume it is 100K, it is 2 billion. 2 billions were liquidated in 1 4-hour candle. That's a lot. Often that would be a local bottom. That's why I love it. Even here we had quite significant open interest drop. What we have after that, quite significant pullback. I have really good news for you. I have packed my trading strategy into a step-by-step guide that's ready for action. Inside, I break down exactly how I make from 500 to 1000 and more per trade, with real examples straight from my own experience. No fluff. You can grab it completely for free right now and start using it today. Just follow me on Telegram and we'll automatically unlock it for you. The link is in description. Second way of how you can use open interest, it is for identifying a breakout. But here you must be careful because it's so easy to fall into a trap because you need to understand difference between absorption and breakout. Let's dive in. Shortly, let me build you a scheme. Shortly, you take breakout only after a range. Better if it would be something like this. For example, price drop. After that, you have consolidation. You have consolidation on bigger time frame, at least 4 hours. And after that, you have a price slowly squeeze up. At that moment, for example, price dropped, open interest was like got liquidated. And after that, open interest slowly build up. Here, there must be slowly build up because if open interest by somehow, you will see something like this massive pump, but price did small, or for example, local only higher high. With bigger chance, price will kick out that open interest before continue. Let's cover with you some few examples of breakout. You take breakout only after some consolidation, like here on Ethereum. Pay attention that consolidation here was for quite significant period of time. Price since 24th of June until 9th of July, several weeks. After that, what's going on? Open interest started to build up quite significantly and price slowly squeeze. You can see open interest at, price slowly squeeze. Open interest at and price bump. And we already have a breakout because when you have breakout, you always pay attention to another indicator. It is a volume profile. What means a real breakout? When we have value in volume profile and price get out from that value and fix out of it at least for a day, like here. That's official breakout. You can take aggressive trade, for example, even when open interest adds, and take as a breakout. Also, you can take a trade after some local consolidation, because honestly, it's safer because you have clear breakout direction. In some cases, there could be trap. Pay attention, for example, here. Massive rise in open interest, and pay attention where it happened. Ethereum before did a significant rise. After that, price started to consolidate, and often first, second breakout ends up as a trap. Rarely price break consolidation at the first time. In most cases, they will do something like this for a start. The best structure, it is price dropped, consolidate, and only after that breakout. The same with opposite patterns for short. Good upward structure, after that price consolidate, and here you have squeezed down with rise of open interest. And open interest at that moment, for example, open interest was like this, big liquidation, build up, and open interest started to build up. Yes, at that moment, it would be really good for potential breakdown. That's example for you. For breakdown, you can see Ethereum did significant rise after Ethereum reached from 2,200 to 4,000, which is a lot. And pay attention where most of open interest started to build up. Price started to consolidate at high. Price started to create a range. And have a look what they did after that. They started to squeeze down. And you can see each candle started to squeeze down with rise of open interest. And when price finally broke all of these lows, it was like officially breakdown. That's the best when you have something like that. Example for you, why I show to you that it is the best when open interest rise slowly. Because if there is something like this, massive rise of open interest, like here from 245 to 200 nearly 90 contracts. Let's go to 4-hour time frame, it would be even better. You can see that massive rise of open interest into low, and price failed to do even lower lows. You can see structure immediately broke, and price went back and took stop losses, which means people that try to short here, their stop losses were taken. Even here you can see what price did, quite significant drop, price consolidate, open interest started to build up, and what they do beautiful breakout. How exactly you can take a trade? The best one, it is to simply to wait that price fix out of a range, and after that you use this local range as a potential place to take a trade. You can build a value here, and at that value low you can take a trade, and after that you can use that open interest as a shield, because those people who build positions, they often will have a desire to move it way more. Let's cover one of the greatest breakouts which I personally took. Major idea, major logic of these breakouts, there must be liquidity. Like this example, it was Bitcoin ETF approval. Price took high, there was quite significant volume that traded at high. Often such volume could become powerful resistance. And what had happened after that? Beautiful and easy build up. Often price start moving slowly, but as soon as they get out from open interest value, they accelerate. And pay attention how far price drop. Price drop until this significant open interest drop. That means until significant liquidation. How it works, let me explain to you a logic. Remember that you can grab step-by-step guide about my strategy. Simply follow me on Telegram, link is in description. How does this stuff work? It's so easy. Quite a lot of people build long positions because they believe that there are some good news, ETF approval. From other side, market maker build short position, because on the futures market, there are always both short and long. And after that, market makers start pushing price down. To push price down, you must open market orders and absorb everyone who built limit orders, for example, buy limit orders. And often they move it against a crowd, and after that they move it until a point where those people who built long positions here, they understood that they trapped, and price move to a place where most of them will get out by stop losses. And when those people who are in a long, they forced to get from their long position with stop losses, what they do, they sell. And they often sell exactly into a low, because it is cascade liquidations. They happen really fast. And those people that were in a short positions, they can use their liquidity to cover their short positions and buy back. That's exactly how market maker create liquidity. And let's cover third, my favorite one. It is absorption. Why I love absorption? Because absorption very easy to understand. You will have way better risk to reward ratio, and it's actually way easier to make money. It was exactly here absorption on BTC. I made on that absorption. What was the major idea here? Exactly at low, someone build significant short positions. In many cases, when you will see that open interest build up such fast dramatically with no result, and plus you have super negative delta, for you it's obviously that someone built a significant short position with market orders. And if those people who build short positions, they got trapped, it means from other side, it always means that from other side, someone with long limit orders absorb that volume. And when they absorb that volume, their goal only one, to go against these short sellers and use it as a meat, as a liquidity. Because if price go against it, what happens to those people who build short positions? They forced to buy back, and they always buy it higher. And because of that, they even move price higher. I love absorption, especially if that absorption at range low, range high, and of course, if that absorption into trend direction. Let's cover a few of them. Before we cover how exactly we take a trade. Even this example that we took within our community, how we took a trade on BTC, you can see price reached that key area, and we took this beautiful trade. Often I use that absorption as a shield and hide stop loss after that absorption. Let's cover absorption on Ethereum when there was news about ETF approval on Ethereum. In tiny place, as I told you, at range high, have a look, open interest increased 2.5 mil to 200,000 contracts. Just calculate 200,000 contracts with average price 3,467. It is nearly 725 mil worth of position entered in tiny area and no result. Price even failed to break that range. In most cases, those people will be liquidated. And what price did after that? First way, 11% drop, and after that, price did a massive 38% drop. That's example for you how a trap could be used. How we exactly can take a trade by using that stuff? When you understand that in some area there's significant absorption, first what you can do, you can use that area as a key resistance. You can see most of open interest entered exactly here at high. Like you can build area where most of open interest entered, like this resistance zone. Before that resistance zone, you take a trade and you can hide your stop loss nearly next key level. And after that, even here it was 1 to 5 risk reward. Let's cover additional few examples of absorption. Significant rise of open interest, price started to create a range, no result. And after that, range high became key resistance. Also, there was here a beautiful example. Price created a range, open interest started to rise. Why this stuff is not a breakout? When we have breakout, what price do? Price slowly squeeze with squeeze in open interest. But when you have price did some took local high, open interest continue rising, but price instead of that started ranging. No, that's absorption. Open interest increased inside of this range by 400,000 contracts. How we can use it, where we can take a trade. Range low, for us it is a key resistance. And we simply placed a limit order at that range low. Here you can use simple mathematicals to take profit. And in most cases, they will go up and take all entire range. That's why when you said take profit, it would be definitely wise to have take profit above all of these highs. Let's cover other example on Solana. Example for your absorption. What Solana did. We have significant rise in open interest in tiny place. Pay attention. Open interest rising, but price started created a range. Plus, pay attention what's going on with the price at that moment. We had this significant range which broke down, and it was a trend continue movement. At this tiny moment, open interest increased by 2.5 million contracts. If we calculate 2.5 million worth of Solana contracts, multiply it by average price 165, it is nearly 400,000 contracts worth of position in USD, my apology. That's a lot for Solana. Plus, in tiny area, you have good trend continuation. That's why, once more, about trap, in what cases it is the best to use a trap. First, you have, for example, you have consolidation, price started a trend move, and after that price retests some local high, for example, and here you have open interest trap. the best. Or you have something like this, or you have, for example, price did several wave move, and after that, price, for example, creates some breakout pattern, the massive rise of open interest, but price even barely take range high. In most cases, it would be also a trap. Like trap, you must ask always yourself who will pay for that move, or who will pay for that liquidity. The same with Ethereum. When I showed you example as a range, price did massive drop, price consolidate, open interest started to build up at range low. Like price already did massive drop. Remember, there must be always a space for making money. To understand better about how to use it, you need a real example. That's why I record for you a video where I explained about my trades, how I take them, and how you also can take them to make money. That's why watch this video, you will understand better of how to use such open interest stuff.